I've never seen anybody who held a gold coin for the first time who did not get stars in their eyes. It just, there's something about the touch of it that gets you. And that, I think that's what, when we say that human beings see the mirror of eternity, the mirror of the divine in gold and silver, and that's why they want it. I don't think that's an exaggeration.
So Justin and Franklin Sanders, two old friends that I've known for over 3 decades and watched grow up and hear about, and wanted to get you back and follow up with one of my favorite subjects, and that's gold. So Franklin, we've shared a lot of experiences together through our friendship, but the one thing I really have never learned about you is, when did you first get bit by the gold bug? How did that happen for you?
Back in the 70s, in the early 70s or mid 70s, I was running a business as an inside man for 2 manufacturers reps, and I started reading all kinds of financial newsletters and that sort of thing. And there was a sort of a subset of the newsletter world that dealt in hard assets, specifically gold and silver. And there were names in like, oh gosh, Jerome Smith had written the book about the Bible about silver. And I just started reading about them. I read Harry Brown, and goodness, I can't think who all. And finally started investing myself in gold and silver in about 77, 78. And got just in time just for that first big run up to $850. And then just didn't have enough sense to get out of it for the next 45 years.
Old habits are hard to break, right?
They are.
Yeah.
It's like smoke.
Yeah, yeah. Justin, what about you?
You know, I started working for my parents in their precious metals business in 1998, a few months before I got married. And they said, I don't know if we can pay you for 3 weeks or 3 months. But here I am 27 years later.
Yeah.
Very thankful.
Yeah. Gentlemen, what do you think is the universal appeal to gold? Why do humans have this natural affection for it?
That's a good question. That's a hard question.
Yeah, it is. It's hard not to get a little bit metaphysical and spiritual about that, to tell you the truth. The first time we hear anything about gold in the scripture is God said that the gold of such and such a land was good. And it's very early in the scriptures, the first few chapters of Genesis. And I would say that there is some reflection of the divine in both gold and silver, in the perfection of them. And mankind has you can't go back far enough in history to find out when mankind did not value gold and silver.
And why do you think that is? Because it has a certain effect when I hold it, I'll tell you that, on me.
I've never seen anybody who held a gold coin for the first time who did not get stars in their eyes. There's something about the touch of it that gets you. And that, I think that's what, when we say that human beings see the mirror of eternity, the mirror of the divine in gold and silver, and that's why they want it. I don't think that's an exaggeration. It's not just, I'm not just speaking poetically.
No, people don't buy rhodium, rhodium jewelry, right? Yeah. So, and that probably explains why the majority of gold is in jewelry, is it's tactile, and people like to have that with them all the time. I remember the first time you put a gold coin in my hand. It was, at your house is the first time I ever saw one, and it was just, I was awestruck. First, it does give you that metaphysical feeling, and two, how overwhelmingly beautiful it was. The quality and the craftsmanship of the United States Mint is almost unimaginable how they make coins like that. That's why you get bit by the gold bug. You know, you touch it once and you want it forever.
There's a permanence about it that reaches into the transcendent. Like everything God's created, it shares something of the nature of God. He's impressed his nature on it. Now that said, just as a matter of history, mankind has always trusted gold and silver and always desired to have it. And so that demand is what I count on continuing. Even though governments have tried for the last 100 years, 125 years to suppress demand for gold and silver and substitute some other kind of money they could control to their own benefit, they've never quite been able to do it. And now, in the last, let me say 10 years, but it's probably longer than that, the wheel has turned again. And the present setup, the dollar as the world's reserve currency, is breaking down. And looking for some non-political asset that's reliable, nations and human beings are going back to gold. And this is not a process that started yesterday now, Larry. I mean, this has been going on with central banks. It's been going on for more than 15 years. If you look at how much of their reserves they keep in gold and how much they keep in U.S. Treasury securities. So they're one of the major forces behind the monetary reset of gold coming back into the monetary system in a big way. And that's not going to change because, central banks are slow to move, but once they start moving, they're sort of like glaciers. They don't stop.
Yeah. I had the honor of visiting the Tennessee Supreme Court one and only once in my life, and that's to watch you defend gold as money. I know your fascination with gold and your commitment to that industry has come at a price. I was there with you. I saw it. Justin, you were growing up during that period of time. I'm sure that was quite a learning curve for you. So I know what Franklin has done to defend gold as real money. And if he could, just give us a couple of minutes on that.
Well, when I went into the gold and silver business in 1986, I guess, I started in Arkansas, and then I moved to Tennessee. And in Arkansas, I got into the controversy with the taxing authorities who said that sales tax was due on gold and silver. Well, just think about this. Suppose you go into the bank and you give the bank a $20 bill, the teller, and you say, I want change for that $20 bill. And the bank hands you back, and the teller hands you back some bills and some change less the sales tax. That's impossible. And the fact is that all the statutory law, the constitutional law, and the precedent defines both gold and silver as money in the United States. I mean, it's enshrined in the United States Constitution. No state shall make anything but gold or silver coin a tender in payment of debt. And yet, in the teeth of that, they were telling me I had to collect sales tax. So I got into a long fight with them, and eventually the state of Tennessee brought criminal charges against me. That's what you were doing. We were doing an appeal of those criminal charges. And so anyway, I lost, and I went to jail for a little while. And the ironic thing is that since that time, all but, I think, 7 states have taken the sales tax off of gold and silver. I mean, Tennessee being one of them in 21 or 22.
No, I think it was May 30, 23.
23. So, the purpose of the tax of any tax on gold or silver is to obstruct the circulation of it, to obstruct the use of it as money, because legally it is money. And the reason that the founders of the United States put that in the Constitution was that they knew that the money had to be independent of politics. The money couldn't be subject to politics. And they understood that when you create money, fiat money, through banks or however you do it, whether the government prints it or banks create it, then the people are going to be decapitalized. They're going to be defrauded over time. And I don't know, I guess I was just crazy, Larry. I just couldn't stand it. I mean, I knew what the law said. I spent somewhere around 1,000 hours in the law library studying the issue. And I knew that gold and silver were money, and they still are. But at least we've seen that progress, that most states have taken that sales tax.
Yeah. I remember watching your attorney explain to the justices that you could still take a $10 gold piece to a local department store and buy things with it. The justices did not know that. And I thought, wow, this is a sticky wicket we're in when the people that are adjudicating the case don't know that gold is money.
Yeah.
Yeah.
Well, it was a long road, and it's been a long road for the whole industry. But there's, in particular, one group called the Sound Money Defense League that's done a really good job getting those laws passed. And right now they're working on getting the capital gains tax removed from gold and silver too, because it's ridiculous that the state creates inflation. And so let's say that you have a house. You buy a house for $100,000 in 1980, and in 2000 you sell that house for $300,000. Well, they're going to claim that $200,000 is a capital gain, but you and I both know it's not. That's not the capital gain. The price of the house has gone up because of the inflation. There may be some other gain in it, but it's mostly gone up because of the inflation.
Right.
And they try to do the same thing with gold and silver. It's not the gold and silver that have gone up. It's the dollar that's gone down.
Right. Justin, is the jig up kind of on what your father was talking about? Are people becoming more aware of this?
Some people are, but not people in the United States, I don't think. We saw a huge amount of retail investment demand at various times between 2020 and 2023 because of COVID, because of the GameStop stock issue, and then because of Silicon Valley Bank's collapse. We had delivery times out as far as 4 months, 5 months on silver and gold items to retail customers, and huge increases in the markup of items over the price of gold and silver. Things that we hadn't seen in 45 years in our market. But the problem is that really represented a tiny fraction of the folks in the United States getting involved in the gold and silver markets. Last May, I was visiting one of our largest wholesalers and asked them, what percentage do you think of the American public were involved in the gold and silver retail market when we saw these huge spikes in demand, huge increases in price, huge delivery delays? And they said it couldn't have been more than 2%. And I said, well, what would happen to the retail gold and silver market if we saw 10% of the public get involved? And they said it would come to a screeching halt. So that says that, there's a little bit of need to get involved. But when I said some people are involved, those people that know that the jig is up are foreigners, specifically foreign central banks. And you can see this in their buying of gold related to U.S. Treasuries, really going back 13 to 15 years. They've been buying at least 3 times, maybe 5 times the amount of gold that they have U.S. Treasuries, which is a huge shift. It says that there's a loss of confidence in the dollar internationally. When they're not buying that, they want safety, so they're going to gold. And that buying was really kind of put into hyperdrive when Russia or following Russia's invasion of Ukraine, when the United States seized Russia's foreign reserves.
Yeah.
Everybody that woke everybody up to the fact that, hey, our dollars really aren't safe. They could be taken from us. And so gold buying by foreign central banks has increased many times over since then. That was February of 2022.
Okay.
So that's kind of the silent whale driving the gold market right now.
Okay. So if I'm just a consumer looking to buy some gold, what you're saying, it sounds like, is I'm actually in competition with maybe the Bank of England?
Yeah, in a way.
In a way, yeah. But in a way, but the Bank of England has in some ways done you some favors too, because there's a phenomenon in markets where when a market kind of has a range for a long time, and then it breaks through that to a new high, which then becomes the new floor. Think lumber about 5 years ago. You may have seen that meme of a picture of somebody driving down the highway, pulling a trailer with a load of lumber on it, and it said, "Saw a millionaire going down the road today." You know, that's what's happened in the gold market. We saw that in the lumber market, this new highs, and then that was the floor. That's the floor today. Those old highs are the floor today. That's happened in the gold market since March of 2024. So let's say the last 15 months. That's happened not once or twice, but it's happened 40 or 50 times. And when that happens, each time that happens, it pulls old bulls out. Old bulls who have been holding gold for a long time, saying, I need this to get back to even, or I need this to get a 20% gain. It hits their target, they sell, and that's happened over and over and over again. So what it's caused is a glut of inventory in the retail precious metals market. That means that gold and silver coins are very, very, very cheap right now.
Yeah.
The market are tiny, and we really, I don't recall a time seeing prices this cheap. We can buy 90% silver in the wholesale market for 25 cents under spot. It's just unheard of.
Yeah. So I want to come back to that in just a second, but of the world supply of gold, who owns it? Where is it?
Was
That's a good question.
central banks own about a quarter of it, maybe somewhere between a quarter and 30%. Another vast amount will never come out. I mean, it'll never come to market in the sense that, a woman has a 14 karat gold chain. She's not going to go down under normal circumstances and sell that and throw it back onto the market. So that kind of stuff is sort of taken off the market forever.
So what you're saying is that most of the gold is in jewelry.
Most of it is in some form like that, where it's not going to come back. Now, a lot of it is in monetary form. And of that, about 25 or 30% is in central banks as reserves. So that leaves a lot of room. The gold market, there's the retail market that we deal with.
Yes.
And then there's a market above that where you've got macro hedge funds and ultra wealthy individuals who they don't buy gold coins like we sell, for instance. They buy 100-ounce or 400-ounce gold bars. And so there are different markets. They all work together eventually. But I think the point Justin is trying to make is that you assume with markets that supply will always be there. With gold, you can't assume that, because we've seen it twice in the last 20 years go to huge delays for both gold and silver, 8-week to 4-month delays. So that's why it's a game you need to get in soon if you're going to get into it.
So when you say there's a delay in the supply chain for gold, I don't connect the dots for me. I'm not quite getting that. So I'm one of your clients. I call you and I'd say, I'd like 20 gold coins of some denomination. Where are they coming from? I mean, I don't understand where the gold is? How does it get to a client? Don't clients that buy gold, aren't they, like you said, a second market from the banks that are buying bars? Are they really competing with each other?
Um, well, only in the sense that they're all in the same market. But what happens is there's just not enough retail inventory for to let me put it this way: the gold and silver market have a real narrow, real low door into them, and it's not everybody can't get through that little door when they all decide they want to get it at the same time. And what we saw in 2008 in the great financial crisis, and what we saw in 2020 after COVID, was all of a sudden all of these people decided they wanted to buy gold and silver, and there simply was not enough inventory for them. And so we had to wait until it came back. Where does that come from? Well, there's a secondary market. There's a whole infrastructure of wholesalers who sell to retailers like us, and so that's where the retail products are going to be. Not so much the 100-ounce bars, 10-ounce bars, kilos, and things like that.
So it's literally it's similar to an over-the-counter market, where it's just lots of participants that are connected.
Yes.
Yeah.
Yes.
Okay. So where do the central banks keep their gold? I mean, I kind of picture this big safe somewhere, and sort of like Fort Knox. But where would the Bank of England or the Bank of America keep their gold?
Well, they're not very forthcoming about that. They don't want you to know, to tell you the truth. But for instance, in the Federal Reserve Bank of New York does the gold operations for the Federal Reserve system, and they have vaults 5 and 6 floors underneath the ground in Manhattan. The Bank of England is somewhat the same way, but they have vaulting arrangements like that.
Okay. Well, I'll be in New York next month. I'll look around, and if I see anything, I'll be sure to pass that along.
I'm sure they'll take a look at it.
Yeah. So when these foreign banks start accumulating massive amounts of gold, how influential can these banks and countries be on the world stage now that they've got a mass amount of gold?
Well, here's how the influence works out. What you're seeing right now, and Trump is only the catalyst for it, he's not really the cause, is a complete reset of post-World War II trade, defense, and monetary relations. In other words, there's a change. The whole setup, the rules are changing. And it's small banks, small central banks, small country central banks like Poland. It's big countries like Russia and China who are buying. And in fact, almost every central bank is adding to reserves. I think the World Gold Council did a survey several months ago, and about 85% of those banks questioned were planning to add gold. The good thing about that is that they're fairly price insensitive when they do that. In other words, they've got a job of buying 2 tons of gold. And whether the price goes up a little bit or down a little bit, it's not going to make much difference. They're going to keep buying that gold.
Yeah.
And so, that's when central banks across the board and around the world start doing that, then it has a huge effect. In addition to that, you've got the whole, the BRICS nations and the Chinese and Russians who want, all of those nations want something other than a U.S. dollar system, because the dollar has been weaponized against them politically, and they know that. They want to get out from under that. And the only non-political, dependable asset is gold. Reserve asset is gold. So that's why they're buying. And it's most of them that are buying, most central.
Yeah, so let's make sure everybody understands when you say BRIC countries, what are those 4 countries that make up that sort of abbreviation?
Well, it's Brazil, Russia, India, China, and South Africa. And then there are other nations that are associated with them. And they're trying, among other things, among the trade relations that they're trying to establish to each other, they're trying to establish new methods of cross-border payments. Right now, you've got the SWIFT system, which is a U.S. dollar system, and if they cut you off from the SWIFT system, you're dead. You can't make cross-border payments. A country can't make cross-border payments. They're trying to start their own system. They're starting it. It's going, and the U.S. dollar has two big problems. It's got three big problems actually. It's all the money is borrowed into existence, but there's a big trade deficit. There's a big budget deficit, and it's not just that people don't trust the dollar politically, although that's true. It's that they look at the dollar and look at the deficits that the U.S. is building, the trade deficits and the budget deficits, and they say, "Hey, this thing's going to go belly up one day. This dollar is going to become insolvent. Do we really want to hold all our reserves in U.S. government treasuries when it looks like the Treasury is going to one day become insolvent?"
Yeah.
I mean, they've just reached a point where they're right over the edge of the cliff.
Yeah.
Justin, is there it sounds like there's kind of a gold Cold War going on.
Yeah, that's a good way to put it. It really is. I mean, it's sort of like the thing that came to my mind the other day is Irish democracy. These countries that are moving towards gold are doing it under the threat of tariffs and bigger tariffs and sanctions and so forth. But they're just going along and replacing the dollar quietly, as quietly as they can, and they kind of have to. They're not doing it because suddenly they got honest. They realize that their currency is garbage just as much as whoever their trading partner's currency is, and so that this is really, I think this is really coming about out of necessity. The threat of the dollar, like Dad said, it's not just political. It's a threat of insolvency. It's a threat of them losing all of the value of their assets, and so they're going to safety because they have to.
They have to. Yeah.
What effect has tariffs or tariff talks had on gold?
Well, I mean, initially it's negative for gold. Market shock always leads to a flight to liquidity, and everybody sells everything, and everything goes down for the short term. For the long term, another effect in the short term is also, I guess you would call it investment paralysis. People are so scared and so uncertain about what these tariffs are going to actually mean, they just stop doing anything. In the long term, I think that the tariffs can't be anything but good for gold. Do you agree?
Yeah.
Is that because it's just more people are more scared and gold is emotional, right? So people flock to gold when they're scared. I think that's kind of a big overarching point you're trying to make here.
Yeah, it's a bridge. Really, gold is a bridge across chasms of economic and monetary uncertainty. It's a bridge of value. It carries value across those chasms, and so people run to it when they see those chasms coming up.
No doubt that fear of the economic result of those tariffs, fear of the unknown, has driven gold's price strongly in the last few months.
Yeah.
It's added.
Yeah. So you guys represent two different generations. Justin, your father and I's generation, we grew up with our parents saying things like "sound as a dollar." So, have you seen a generational shift in how people view gold?
I wish I could say that millennials are waking up to gold and silver. I'm not sure that they are yet. The fact of the matter is that most of our clients are an aging demographic, and I think that the general public and the younger generation will wake up to gold. It will happen. My hope is that it's sooner rather than later.
And what's going to take that? What is the catalyst for them to go, oh my gosh, cryptocurrency really failed us?
Yeah,
Right?
I mean, what is the catalyst? The catalyst is we've had a number of conversations about this in the recent past. Our monetary and economic system is so complex that we have together over 60 years of experience in the precious metals market, and we sit here and read some of these catalysts and go, I don't understand what's going on here. I don't know how to figure it out, but I know that it's moving, and this is a catalyst moving us further in the direction that we think things are going to go, which is a devaluation of the dollar over time and a need for safety. And what wakes people up? Is it another big bank collapsing? Is it Bitcoin having a bigger loss than anybody could imagine? I don't know.
Larry, change often starts at the top of society and moves down. And certainly one of the things that we've seen in the last year and a half that's driven the gold market up very strongly is big time investment funds suddenly realizing there is no other safe haven but gold. But once upon a time, when you got fear events in the market, fear creating events like a war, an assassination, threat of war, that sort of thing, people would run to dollars. They would run to U.S. treasuries. But we literally saw a huge shift in that in the last year, where you get one of those events, say stock market crash, something, big drop in the stock market, and they're running into gold now. And you've even got people like Goldman Sachs, analysts at Goldman Sachs, saying that gold is now the premier safe haven investment.
Okay.
So it's starting up there. It'll trickle down to the retail public, and when that happens, oh goodness, as Justin said, if 10% of the people in the United States each wanted to buy a gold coin, the market would lock up.
Yeah,
it's not that.
It's not that big. Yeah. Yeah. So before we leave the world stage in gold, I was curious, how the De Beers cartel controls diamonds. Is there a gold equivalent to them?
That's what the LIBOR scandal was about.
Yeah.
I'm getting a lot of raised eyebrows here, so there's got to be something going on.
Well, in the whole story of gold and gold's price since 1971, when gold was demonetized by Nixon, the whole story has been the U.S. government and central banks trying to suppress the gold price. And you do not have enough time. You would need weeks for me to show you all the evidence of that. But there's no question that they did that. They did that in using the Treasury's Exchange Stabilization Fund. They did that using bullion banks as their stalking horses. I watched it for 30 years, 35 years, and you could see how they were manipulating the gold market. They suppressed the gold price. The thing about it is that's good for us. And the reason it's good for us is because when you get a price suppression like that, it's like a pressure cooker. You're turning up the heat, turning up the heat, turning up the heat. Eventually the pressure cooker explodes. Eventually that price explodes. That's what you've been seeing in the last two and a half
if it wasn't Nixon, was it going to be some president that took us off the gold standard? Did that have to happen?
Yes.
Yeah.
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 Because Vietnam, the amount of money they created for Vietnam meant that they couldn't maintain the percentage gold reserve they had maintained before. And they took the whole world off the gold standard is what they did. And look at the results since then. I mean, the dollar's lost more than 95% of its value, but other currencies have too.
Sure. When we last spoke, you were explaining that there is, and has been, I think you said for 2,000 years, a relationship between the pricing structure between gold and silver. There's a ratio that it seemed to has consistently stayed in. Could you guys give us a background on that?
If you go back 5,200 years, if you had a chart that was 52 feet long, and you charted the gold-silver ratio, for all but the last foot and a half of that chart, 52-foot chart, the ratio would be under 16 to 1. Under 16 to 1. Now, I don't know why. Maybe it's because the ratio of gold to silver of silver to gold in the physical, in the world's Earth's crust is 17 to 1. But for all that time, the ratio has been under 16 to 1. And it never got out of that until silver was demonetized by the U.S. in 1873, Germany in 1873. There was a lot of political manipulation. And behind it, I think, were the English banks who wanted gold to be the sole monetary standard. So that happened in the United States with the Act of 1900. So if you look at the technical aspects of it, the gold market made an enormous cup and handle formation from 2011 until 2020, and that's a very strong technical formation that says we're going to have a bull market when this is completed, but it takes a long time to work through it. And once it has already been completed for gold, gold has moved to new all-time highs. The roadblock for gold was the $2,000 an ounce. It got through that to 3 times, got through that. And once it got through that, last year it just surged. It just went crazy. And so it gained $1,500. Silver has the same cup and handle pattern in its long-term chart, but it just hasn't advanced quite as far as gold has in the development of this bull market. Now, there are people saying now, big time analysts, again, drop the name Goldman Sachs, who say silver is decoupling from gold. Silver's price is not going to track with gold's anymore because we had the ratio go up. It went up to 100 to 1 in 1990 at the bottom of the silver market, 1991. And then again in 2000, in the COVID panic, it went up to 125 to 1. But these are spikes. And now recently it's gone over 100 to 1 after staying well under 95. So what does that mean? Well, it may mean that silver and gold are decoupling. It may mean that 5,200 years of history don't mean anything anymore. Or it may mean that these people saying that gold and silver are decoupling are a contrarian sign that silver is about to take off and fulfill the destiny of that cup and handle and really go wild. Because once silver gets to $35, it's going to run to $50, which was the 1980 high. And then once it gets to $50, the sky's the limit.
So help me understand, is this a really good time, I just want to make sure, for an individual thinking about buying some gold to come in?
Well, we sell it, so we always think it's a good time. So, to be fair,
Well, you know,
But-
when people ask me that about the stock market, Justin, I always say, you know, when they say, when is the best time to invest in the stock market? And I tell them when it's open. Right.
right?
Yeah.
What's the best day to trade? Today?
Today.
Yeah. It is a very, very good time. It's a very good time because what's taking place. Number one is just looking at the markets themselves, and not specifically gold and silver. There's a paradigm shift taking place, a shift in value from dollars to hard assets, to commodities, going on throughout the world, and it's just begun. And there's much farther for the precious metals markets to run up, because there's much farther for the dollar to go down.
Down. Gotcha.
And really, you know, when you look at the gold chart, flip it over if you want to see what the dollar's doing. And that's just going to continue. There hasn't been a fiat currency that begins a decline and then suddenly turns around and everybody loves it forever. It always collapses. Fiat currencies always collapse, and there's always a return to real value, and that's what we're seeing in the precious metals market. Specifically, you asked if it's a good time to buy gold. Yes, it's a good time to buy gold. It's an even better time to buy silver. Gold has broken out. Gold has hit new all-time highs. Silver hasn't done that yet. Silver hasn't broken through $50. And I think what Dad was saying, discussing the ratio, is that the ratio is it is a measure of how many ounces of gold silver will buy, right? How many ounces of silver does it take to buy an ounce of gold, right? And the ratio says, history says the ratio is always going to return to 16 to 1. It takes 16 ounces of silver to buy 1 ounce of gold. It takes about 100 to do that today. If history is going to repeat itself, and it always has in every precious metals bull market since 1873, silver about quadruples gold's performance. And between 1999 and 2011, we saw gold increase turnover 7.2 times. We saw silver turnover 12.5 times. So the problem, though, is when we talk about buying gold versus silver, you go out and you buy $100,000 worth of gold, hold out your hands. You know, you can put $100,000 worth of gold in two hands. $100,000 worth of silver, you got to have two buddies to help you carry it.
Right, right.
So there's a difference in volume and weight that you got to account for.
Yeah, where do you hide it? And where do you put it? And oh my gosh, honey, we're having dinner guests. We got to move the silver. So, right. So let's talk about something besides gold and silver for a minute. You guys are in the precious metals business. What are the other precious metals, and should I be concerned about those?
Well, they're what they call the white metals, which is platinum, palladium, and then there's some very smaller markets like rhodium and iridium. But platinum and palladium are the main two. And from my standpoint, versus gold and silver, those markets are much smaller. Silver, see, is a much smaller market than gold. So, which is probably why it always outperforms gold, because a given amount of money will go further to drive up the silver price than it would the gold price. But platinum and palladium are both largely used industrially in catalytic applications. And if the economic outlook is bad, the outlook for those would be bad too. And they have just lagged gold in the last 10 years. Gold is, I look at the price of platinum divided by gold, and it's at its lowest point, lower, I think, than it's been in 40 years. So that itself says probably it's a pretty good time to buy them. They've just broken out in the last week, as a matter of fact, up to the areas of resistance that are really crucial. If they break through these areas of resistance, they'll go a lot higher. Yeah. So they're small markets. They can do crazy things. But both markets have quirky supply and demand profiles. Most of the palladium comes from Russia, and some of it comes from Southern Africa. Most of the platinum comes from Southern Africa, and some comes from Russia. So they can be subject to wild jumps. If I were going to put those into a precious metals portfolio, I would put not more than, say, 10% platinum and maybe 5% palladium if I would put any at all.
Yeah. When you buy
Because
gold,
just
we get bars and coins. When you buy platinum, what do you get?
bars and coins.
Bars and coins. Yeah. Okay. All right. So what about copper?
You know that the U.S. monetary system was originally a trimetallic system with copper, silver, and gold. And I think copper has a future, but the problem with copper is that it's so dependent on the economy. And so I just kind of stay out of copper.
Franklin, I cut you off when you were designing your precious metals portfolio, so I'd like for you to just touch on that a little bit more, like what percentages, maybe, and why.
We do something that other dealers don't do. Now, I don't know why they don't do this. I don't necessarily think we're smarter than everybody else in the world, but it's really, really obvious to us. The gold-silver ratio goes up and down in a range. And so what you want to do, like right now, it's with the ratio at 100 ounces of silver to 1 ounce of gold. You want to take your gold and swap it for silver. And then we're going to ride that down as the ratio drops. When it gets to 36 to 1, we're going to swap that silver for gold. At that point, what was the silver that bought 1 ounce of gold at a 100 to 1 ratio, at a 36 to 1 ratio, is going to buy 2.78 ounces of gold. In other words, you can more than double your gold if you swap back and forth. Now, that's not a like-kind transaction. Unless it's in an IRA, you're going to pay capital gains on whichever side you sell.
Right.
But the trade is rich that it really pays for itself. And you're going to come out with more in your hand. So what we usually tell people is to buy 50%, 50 to 70% silver and 30% gold, 30 to 50% gold, as long as the ratio is high up here. When it goes down lower, of course, we would swap that and be heavier on gold and silver. As far as platinum or palladium, we generally don't recommend it. We have a few customers who just really want it. If I were going to buy platinum, I probably would be buying some now, but I'd not buy more than 10% of all the money I was going to put into gold and silver.
Yeah. Yeah.
So just to make sure, you guys, how do we get in touch with you? How's the best way?
Well, you can always call us. Our number is 888-661-4093. You can go to our website. Our website is volunteerpreciousmetals.com. I am Justin, so you can email me, justin@volunteerpreciousmetals.com. Dad's in the office about 3 days a week, 4 days a week, answering calls. You can email him at FS, like Franklin Sanders, at volunteerpreciousmetals.com.
Are you guys, is there a third generation coming up?
Third generation has been in the office now for very nearly 5 years. Yes.
And who is that?
My son's been working with
Your
son Elijah.
Awesome.
Yeah.
Awesome. So, Franklin, you wanted to say?
One last thing. I want Justin to explain how premiums affect what we recommend.
Yeah, just briefly, I wanted to mention premiums because it's so easy if someone is thinking about getting involved in something new, it's so easy to get lost or taken advantage of. And we want anybody that's thinking about precious metals to avoid that. And the key to doing that is understanding what premium is. And you have the spot price of gold and silver that you see on the internet when you pull up any website. And then you have the price of a coin. And often that coin is not an ounce. So it's difficult to figure out what you're paying an ounce. The premium is what you're paying at the markup that you're paying per ounce over the price of gold. You never, ever want to pay a markup in a normal market over 5% for for the gold or the silver that you're buying. And if you don't understand, or the person that you're talking to you won't tell you the premium, you shouldn't buy that item because they're charging you too much. If they're hiding the real markup, you need to understand and figure out what that markup is and ask them, what am I actually paying per ounce? When you find that out, divide it by the price of gold or silver at the moment, and that will give you the percentage markup. If it's over 5%, don't buy it.
Wise words from two wise guys. Gentlemen, thank you so much for giving us your time. Justin, it's always great to see you again, brother. Franklin.
Yeah, thank you for
Franklin, you know, I love you. Love you, brother.
Love you too. The opportunity.
Yes,
Yeah.
thank you very much.
See ya.